The Union budget for 2025-26 was unveiled by the Finance Minister, marking a pivotal moment for the Indian economy. As growth momentum wanes, the budget seeks to return some affluence to taxpayers. With the focus on tax cuts, the government aims to place more money in the hands of individuals, fostering increased spending. This strategic move comes after an extended period where India's GDP growth remained stagnant, underscoring the pressing need for economic revitalization. One of the standout features of this budget was the significant revision of the income tax rebate. The annual income threshold for tax relief has been elevated to Rs 12 lakh from the previous Rs 7 lakh. This change is a welcome gesture for the middle class, who have expressed discontent over their tax burden. The transition of the highest tax rate to apply only after earning Rs 24 lakh introduces a more equitable tax structure, allowing for greater disposable income aimed at inciting consumer spending, thereby stimulating growth. While the tax cuts are lauded, apprehensions linger regarding potential economic repercussions. The government's decision to forego about Rs 1 lakh crore in revenue does raise concerns about fiscal discipline. Critics argue that extensive tax relief can lead to increased borrowing, potentially straining financial markets and raising interest rates for citizens. Yet, the finance minister reassured that despite this substantial tax reduction, the fiscal deficit is projected to narrow to 4% of GDP for the upcoming financial year, maintaining a semblance of financial responsibility. In another significant shift, the emphasis on capital expenditure noted in previous budgets has diminished. The government reports a shortfall in its capital expenditure commitments, falling nearly Rs 1 lakh crore short in the current financial year. The allocation for the upcoming year shows minimal increase, creating doubts about the pace at which productive infrastructure can be built. Nonetheless, capital expenditure levels remain historically elevated, indicating a commitment to sustaining investment in public assets, albeit at a slower pace. Overall, Budget 2025 seeks to strike a balance between providing immediate financial relief to taxpayers and ensuring long-term economic health. By stimulating consumer spending through tax cuts, the hope is that businesses will respond with investments that bolster job creation. Its ability to navigate the fine line between fiscal prudence and economic growth will be closely watched as the financial year unfolds.